Issues continue to plague many of us. There will be some welcome relief in the new year. We're talking about changes to our taxes, what some are calling bracket creep. Well, Marshall Clay from the Welsh Group joins us this morning to explain a little bit more and break this down for us. You and I were just speaking during the break that these changes happen every year, but we're really talking about it because inflation is so high.
That's right. 2020 has been a special year where we've had close to double-digit inflation, and so that's feeding through to a lot of different things. I think we talked a couple of weeks ago about the increase in the Social Security beneficiary or the Social Security benefit. This is kind of another aspect in which inflation is affecting different tax provisions. So there's a number of different tax provisions, close to 60. So we're not going to be able to talk about all of them today, but I wanted to focus on just a couple, just
the
to
major
explain.
Ones, okay.
Well, just, maybe not necessarily the major ones, but something, a couple that would really affect the viewers here, and that's first one is the 401k contribution limit. So last year the 401k contribution limit was $20,500. That's moving up almost 10% to $22,500 this year. That's a big increase. Also, they're moving the catch-up provision. So if you're over the age of 50 now, you can actually contribute another $1,000. So a total of $30,000 that you can contribute to your 401k. So if you're already at that maximum level, if you're one of the fortunate ones that's able to contribut $30,000, make sure you're looking at your budget going into 2023 to make sure you can continue to do that.
I would love to contribute more, but because of inflation, and you got to find the money.
Right.
All right. What are some other provisions that you see that really affect people?
So I think one of the biggest ones is the standard deduction. So the standard deduction, again, that's moving up rather significantly as well. And the government typically gives you a group of items that you can deduct against your taxes. And then the government also gives you a standard deduction if that itemized deduction does not exceed the standard deduction. So the reason why that's important, we're moving into charitable gifting season. I saw the great segment with JJ talking about King's Home.
Yeah.
And I think when you're looking at charitable gifting, you want to make sure that you're getting a tax benefit for that gift. And so if you fall within the standard deduction, there's a chance that a good portion of your charitable gift won't give you any sort of tax benefit. So there's some things that you can do, whether it's giving low basis stock to avoid paying future capital gains. If you're 70 and a half or above 72 years of age and actually receiving RMDs, you can actually give a portion of your required minimum distributions. So there's a lot of different ways that this adjustment is going to affect the tax code. So be sure to get with your accountant and get with your financial advisor to see how all these particular provisions will affect you as we enter 2023.
But we should leave people with this. So in other words, if I'm getting more money for Social Security, more money, maybe my employer's paying me more because to help with inflation, it's not going to knock me up into a higher tax bracket necessarily to hurt me.
That's the design. That's the design, and this happens automatically every year. And you and I mentioned it. It's so large this year that it's getting a lot more publicity. People really need to know about it. So it's important.
And it happens regardless of whoever's in office. Correct.
Correct.
Right.
Correct.
It's already set up. Yeah. Marshall Clay with the Welsh Group. We do appreciate it.
All right. Thank you.
All right. Still ahead now. The people have spoken. The sexiest man alive